Welcome to the Financial Freedom Podcast with your host, Lorna Poole, sharing the secrets to creating wealth, investing, and that all-important money mindset. To find out more and accelerate your journey to financial freedom, head on over to www.lornapoole.com to get started. Welcome, everybody. Welcome to the Financial Freedom Podcast. What makes a successful trader? What are the characteristics that make someone successful? With me today is Anmol Singh. He launched Livetraders.com in 2015, and Livetraders has been voted the #1 trading education firm for the last 3 years. Anmol has coached and trained over 1,000 plus traders and investors, some of whom have gone on to run their own hedge funds. Anmol is a leading expert in the trading psychology, helping traders from all over the world to deal with psychology and behavioral issues that arise when high stakes are on the line. Currently, Anmol has remained an avid stock market and Forex trader. Anmol spends his time working with students with his trading firm Livetraders and continues to financially back them. Anmol is also involved with other entrepreneurial ventures, franchise stores in the automotive sector, in addition to maintaining a real estate portfolio. Anmol, great to have you here.
Thanks for having me.
So tell us about trading. How do we go about it? Like, what makes someone successful at? Because it is high stakes, right?
Right. Trading and investing is a business where anybody can get into, because all we really require is ourselves, our mindset, a computer, and internet. So, how people get into trading is, firstly, you decide if this is something that you want to do alongside your current job. So if it's something that you want to do on the side to generate some passive income, or just to, grow your investment and take control of your investment rather than giving it to fund managers or things of that nature, which charge exorbitant fees. Or is this something that you want to do as a career? Maybe you want to do this full time. So once you've decided that, then you go to the necessary pathways to learn that craft and then, dive into trading. What makes a good trader is somebody who is logical, who is a numbers person, and numbers person not in terms of being good at math, but numbers in terms of, thinking in terms of numbers, like thinking in terms of statistics. So, okay, if I take 10 trades, maybe I lose on 5 of them, maybe I win on 5 of them. And if I win more when I win and I lose less when I lose, then, the numbers work out. So the characteristic is somebody who is less emotional, who doesn't wear their emotions on their sleeve, who is logical, thinks through the processes, and has ability to follow a direct trading plan. So somebody who's disciplined, somebody who can invest time in learning, somebody with an open mind and just a willingness to learn. Those are the characteristics of great traders.
Willing to learn, yeah. I was on a seminar quite recently about financial freedom, and one of the things the lady says was, don't be getting your high off your financial freedom. Putting your portfolio together and, investing and all that. She says, don't be getting your high off that. If you're doing that, like what you said, take your emotions out of it. That's
totally.
quite a biggie, right?
Yeah, a good trading is boring. A good trading is really boring.
That's what she said. Yeah, she said, right. It's got to be boring. She says, you're not doing it right if it's not boring.
Right, because if you're having too much fun with it, that might, suggest that maybe it's like a gambling mindset, perhaps, right? So you need to not have fun while you're investing in trading, and it needs to be boring. It needs to be process-based. You're coming in, you're executing on your plan, and then you let the plan take care of itself.
So process is a big part of it, right?
Yes, exactly. You need to have processes of when you got to get into a trade or an investment, when you're going to get out when you're wrong, and when you got to get out when you're right, because that's also important. Knowing when to get out when you're wrong, knowing when to get out when you're right. Because, this buy and hold strategy that's been, taught over the years, it's actually a very bad strategy for most people, because buy and hold for most people turns into buy and hope, which is not a good strategy.
So explain buy and hold. What is that exactly?
So, buy and hold is a strategy that you read common in like investing books where they suggest, hey, don't trade in and out of the position, just buy and hold it. In the long run, you'll get paid. Perhaps, but that also that's also dependent on where is it that you originally got into a trade or investment, right? What if you got at the worst possible time? What if you got in right at the top? You're not going to keep holding all the way till it goes down. So, that's a buy and hold strategy. But for most people, it's actually buy and hope, which is the wrong strategy to have. You need to know exactly when you want to get in and exactly when you want to get out. Because greed destroys more investors and traders. When the stock they get into goes down, rather than getting out and taking a small loss, they think it's going to come back up, so they just keep holding. And a lot of times, it never comes back up. And what could have been a small loss turns into a really big loss.
Yeah, so it's knowing what to do and when to do it.
Exactly.
But knowing it by your numbers and not by your emotions.
Exactly, because emotions you don't know. Nobody knows. I don't know where a stock's going to go. And if I make a decision based on my emotion, that's probably a decision that's going to cost me in the long run, because nobody knows where the market is going. Not CNBC, not the hedge fund managers. Nobody really knows where the market is going. All people are doing is just making educated decisions based on their numbers, their models.
Yeah. What about learning? If somebody's starting off, where should they be investing their time to learn? I mean, there's, in this world today, there's so much information that it's confusing. Or, there's trends. Oh, this is the next big thing, or this or this. Like, how do you get good concrete advice?
Right. I mean, first thing you need to do is not really rely on anybody's advice. What you want to be doing is creating your own models and processes and your own thinking, and based on past history. If you followed a method, let's say in the past 10 years, how did that do? If it, let's say over the last 5, 2, 3, 10 years, it did really well, it's probably going to do similar the next 3 to 5 or 10 years. So
how long do we need to be looking at for? 10 years, 20 years?
That would depend on the type of trading you're doing. Like some people, including me, like we do a lot of short-term trading, which is, we get in and out of stocks every day. So in that case,
do you do day trading?
Yes, so I do all forms of trading. I do day trading, which I call day trading for income. So day trading is what you use to trade every day, to live off, to pay your expenses, just as a job. And then you also do long-term trading and investing, which is more of growing a nest egg, growing into a bigger account and having the money work for me.
And what works for a nest egg? Is this EFTs, property, what?
Everything. Best ideal investments are a mix of everything. So I do, most of stocks, which would, for most people, the best thing is just to buy the stock market ETF on its own and let that go and not focus on individual stocks. But for those who are experienced or maybe have learned it for 3-6 months, you can start picking individual stocks. So then you might actually want to beat the market. So that's one thing you could do. And real estate's great too. I suggest everybody to have some investment in real estate. But, as far as stock market's concerned, for most people who are brand new, buying the market as a whole is a great strategy. If you have, 10, 20 years to wait, because over the long run, market always goes higher and gives you 8 to 10%. So by that method, people can double their money pretty much every 10 years, or less, 5 to 10 years because of compounding.
So say that again. In general, it increases by 8 to 10%. Is that what you said? Sorry.
Yes, in average, the market tends to go up, 8 to 10%. That's the average return over a 10-year time frame. So most people look at, let's say they invest today, they're like, oh, market's going down, they try and get out, and then maybe they get out. But if they really just forget about it for like 5-10 years, over the long run, they're going to probably double their money in the 5-10 years.
Oh, what do you mean by beat your market? Because I've heard different theories on all of that.
Right. So, what I mean when I say, in terms of compounding, or what was the question again?
You had said you had said about investing in individual stocks and beating the market.
Right. So
because I've heard you can't beat the market. So
no, I mean I think you can totally beat the market. And there are people who do that every day who beat the market. The only difference is for most people they're not going to be able to beat the market because most people don't know what they're doing. Right. Yeah. Because just buying a stock or selling a stock doesn't make you a trader. Like you really need to know what you're doing. So, most people, yes, they will not beat the market. They will actually underperform the market because getting in and out is actually a detriment to their trading. But for those of us who've been doing this for 5, 10 years, who that's our job, that's what we do for a living. We beat what the market return is going to give you, because the market's going to give you 8 to 10% a year. As a day trader, we can probably make 8 to 10% in a month. So, that's another way to looking at it. But day trading is something that is not something you can really do on the side. That's something you really have to put your time and money into.
And when you invest, like your portfolio, you're investing in different things because there's cycles, right? So something does well, something else might not do so well, blah, 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 blah. Is that right?
Right. Exactly. That's why as a trader, what we do is we are in a few stocks at the same time sometimes. So we might take, in a month, we might take 5 or 10 trades. Some work, some don't. But as long as the ones that work, you make more on the one, that you lost on, then it works out. It's all statistics.
And what does Livetrader do exactly? If I signed up to Livetrader in the morning, how do you help me?
So, Livetrader, what we offer is mostly like coaching, seminars, training, advisory services.
On how to create your portfolio, how to start investing, is it?
Exactly. How to get into this trading industry, how to get into investing industry, how to, invest on the side if you have a job, and how to do it like professionally if you want to do it, as a career. So all that is what we provide at Livetraders.
Okay. Right. And what about property, right? That's a big one for, a lot of the advisors out there say property is one of the best things you can invest in. Why is that? Or what are the models?
Property, there's many different ways to do property investing. One of them is residential, which you might buy some residential properties, right? You might fix them a little bit and then you rent it, right? So a lot of the way it works is you look for cash flow. So let's say you bought a property and your mortgage is, I don't know, let's say $500 a month is your mortgage on that property. Now, let's say you're renting that property out and you're renting it for $1,000, right? So you rent it out for $1,000, you're paying $500 for mortgage, right? Maybe let's say another $100, $200 for taxes. You still end up making $300, $400 as a cash flow. So that's a rental type of investment. And the other one is fix and flip, which is you might buy a house, right, which is undervalued because it's in bad condition. You come in, you fix the property, make it brand new, and then you sell it for a much higher price. So those are the common ways that most people do investing. And then there's commercial investing, which is you buy a commercial real estate property, and which you might lease to other businesses. So, for example, I have a property, in London, which is a residential house. So for a residential house, we paid cash. We've already paid that property off, and now we rent it for, not a lot, but $1,200, $1,500 a month. And we get to collect all of that, because now the property is paid off. But there's also commercial where you might have a building that might have, let's say, 10 office space. And let's say you pay $10,000 a month to mortgage that property, but then you have divided it into 10 offices, which you're renting for, let's say, $2,000 a month, right? So now you get to collect $20,000 and you're only paying $10,000. So the difference is what you keep as an investor.
And what about, you always hear about investing without not using your own money?
I personally don't, like to do that unless it's the model that I described. So a lot of people do, which is investing, which is called wholesaling. So wholesaling is not really investing. What wholesaling is, you go in, you buy a property, and you don't really even buy it. You just get it under contract. But now that contract is yours, right? You have the right to buy the property. And what you go ahead and do is that you find somebody who's willing to pay more for that property, and you sell the contract. So let's say you got a house under contract for $200,000, right? And then and you think that's really undervalued because you were able to negotiate. Maybe there's a old couple who's retiring, they want to move to a smaller house, right? And they're really motivated to get rid of the house, and you could get the house. Let's say the house is worth $250,000, and you negotiate it down for $200,000. Now you own a piece of paper, which is a contract, which says you have the right to buy this property for $200,000. And then you maybe find a flipper or a fixer-upper, which is, let's say, a person who's an investor. Maybe he wants to fix it and sell it. Maybe he wants to fix it and rent it to others. And he says, you know what, I'll pay you $220,000 for this, right? So the market value is $250. You bought it for $200. You found somebody who's willing to pay you $220, and then you just sell him that paper, that contract, and you just don't do anything. You collect that $20,000, But for me, that's not really investing. That's actually a full-time thing, because now you got to go out, you got to find sellers, and you got to negotiate, and you got
Yeah.
to contract, and then you got to sell it. I mean, it's too much
It's another
work.
job, right?
Yeah, it's basically another job,
So you want to make it as passive as possible, right?
Exactly. And to make it as passive as possible, you have to get into the renting game. Where you get it for something, you rent it for, maybe change it a little bit, maybe make the kitchen look a little nicer. Now the property will have more value, right, than you bought it for, and then you rent it, because renting is great. Because the way it works is, in your first property, okay, you might not make a lot, but now let's say you are doing this for 2, 3, 4, 5, 6 years, and let's say you've accumulated 5 or 10 rental properties, right? So let's say each rental property, let's say, is giving you $500 a month. Now that's cash flow without doing any work. You have 10 properties. And then best part is you can hire a property management company, right? Give them $100, $200 a month, and they'll do everything. Like all the, you don't have to be a landlord. If there's anything goes wrong, the property management company handles it, and you just sit back and collect your check. So that's a way better way of investing.
And don't people as well trade to make income, and then they're investing? Like, it's sort of, you can do it together, or you do it as sort of, you're building your money to put more money into investing.
Yeah, I mean, I recommend people do all sorts. So when I started just as a trader, because trading is
asking your story. Sorry.
No, that's fine. I mean, trading for me was a way to get the money, because if you already have the money, then you can definitely do real estate and all things like that. But let's say for somebody who doesn't have any money, trading is a great way to get the money. So what I did was I started off as a trader, made my money in trading, and then what I started doing with that money is I used half of it to live off, and then half of it I put it in another account, which I was doing long-term investing, right? So trying to grow the account. And then when I had enough savings left, I took the money out and put it into real estate. So that's how you start. And now that I got the money from real estate, and I opened up another business. So, trading is a great way to get the money. And then what you do with the money is up to the people.
And what about all this, put 10% away, all that? I mean, you're doing it full time, right? What's your advice around that?
For me, I think what the way people should start is people should start off with, coming in, having their job or whatever it is that they do on the side. So have like a secure source of income. So let's say you, like for example, some of the traders that I know, they really wanted to go into trading full time. But obviously, when you're brand new, you're not really going to make a lot of money in your first few months. It takes time to learn it. So what they did was they had jobs or work that they did in the evening, at the nighttime, to support their trading in the morning. So that's one thing people can do. Or don't leave your job. Continue having your job while you learn, practice on the side. And once you've reached a point where you are making money on the side, then you could definitely go into this full time.
I love that you share that. In fact, I've loved this whole conversation. It's been really powerful. I'm not talking about investing right now, but I had a business, right? And the advice I got at the time was just quit and go for it. And no, have something secure and learn. Yeah, absolutely. Like, this is really great advice. So back to what we're talking about, successful traders, right? Use your logic, numbers, keep your emotions out of it, should be boring, set up processes, discipline. You mean putting in the effort every day, sticking to what your plan is?
Right, exactly. First you need to have a plan. And then when you have the plan, you need to actually stick to the plan. So it all comes full circle.
And learn. Keep educating and educating and educating, right?
100%. I learn every day. I don't stop learning, because the moment you stop learning, that's the moment you stop growing as a person and as a trader.
I love this. Anmol, this has been amazing. So for somebody who's listening to this today, they're really inspired by this conversation. They're really interested to check out Livetraders. What would you say to them about this is the one aha?
I think the one aha moment for me is that, no matter how successful you've been, when you come to the markets, when you come to trading, you have to leave your ego out of the door. the trading and investing doesn't have any place for ego, because the markets don't care about you, me, or anybody else. They move the way they move. So, you need to leave the ego out of the door and come in really with a willingness to learn and an open mind being key, and be willing to learn. So whatever we're teaching, actually learn it and then execute on it, and not just listen to it. So that's the biggest aha moment, is just to keep yourself always open-minded when it comes to anything, business, trading, marketing, anything.
Love it. Anmol, how do we find out more about you?
Best way to find out is you can follow me on Instagram. My Instagram username is @delta90, @DELTANINETY. And if they're interested in checking out more about what I do, they can always head on over to www.preppingforsuccess.com/book, where they'll be able to get some free chapters from my upcoming book.
Thank you, Anmol. I just want to say to everybody, if you enjoyed this, do head over to the Financial Freedom Podcast, where you'll be with like-minded wealth creators who are also on their journey to create financial freedom. And you can find that at www.facebook.com/groups and the Financial Freedom Podcast. Thank you, Anmol. This has been amazing. And I know people are going to get a lot for this. And I love that, I get a lot of people in here wanting to talk about financial freedom, but they're talking about something else. So I love that this is actually about investing. Thank you.
Thank you. It was nice chatting with you.
Thank you for joining us on the Financial Freedom Podcast, to creating wealth, investing, and developing your money mindset. To get started today on your journey, head on over to www.lornapoole.com and grab your free course, 5 Steps to Breaking Free from Your Poverty Mindset and Accelerating Your Journey to Financial Freedom. See you there.